And you can also see here a little 1 on the chart. And this is a 1-to-1 trend-based fib extension taken from the start to the end of A to the end of B, comparing wave A in size with wave C in size. And the most common target for a wave C compared to A is the 1-to-1. So it is quite nice and also quite interesting that price is reacting at the 1-to-1 in confluence with the 786 on a 2 fib time for a potential end of your wave 2. Of course, there's always the potential that, yeah, maybe you get another 4 or 5, but you only really want to sweep the low. You don't want to touch the 886 at 3.55 because that would significantly lower the probabilities of this over here being a wave 2 and would arguably be more bearish. But at the moment, I positioned wave 2 here at this particular low. Now, after a wave 2, you like to see a wave 3 towards the upside, which then gets us talking about what I put there on my chart, like the green line and the blue line. And the blue line is your wave 3. So that is your wave 1, your wave 2. You look for 3, sideways 4, and 5. Generally, a minimum target for wave 3 is the 1.618, a trend-based fib extension taken from the start to the end of 1 to the end of wave 2, which currently I put at the low over here. Now the 1.618, after being touched, eventually, maybe you go to the 2.618 or higher, but generally the 1.618, you eventually expect a sideways 4 and a wave 5. But it doesn't mean that if price cannot reach the 1.618, which by the way, if you want a price, it's sitting at 107, which of course is insane. We're currently sitting at 5. So not yet completely sure if I want to use the more logarithmic targets or the linear chart targets, with the linear chart being a target of 33. Which does sound a bit more sensible in a way. But this is the reason why I didn't include the price in my fibs here, right? It's more about the fibs than the price at the moment, because wave 3 nonetheless should be a big 5-wave impulsive structure. But if we don't reach the 1.618, right, it doesn't mean that it is bearish. Because you can also form a multi-1-2, where you have a wave 1, you get your wave 2, you form another 1, another 2, and then you start your big wave 3, which actually is more bullish. A double 1-2, you expect a bigger wave 3 to the upside, followed by 2 4-5s, leading to much higher prices. Also, this wave 1 does not necessarily need to take out the all-time high per se. This wave 1 does not need to move to the 1-to-1 trend-based fib extension, right? You can also have an internal 1, 2, 3, 4, 5, so inside this range, that maybe touches the 886 taken from the high to the low, then get a corrective move down. That is most important. So you want an impulse up, just like we had here, and then another corrective structure down, right? That is what you are looking for in both wave 2s as well as wave 4s. And then you're looking for price to continue towards the upside. Now the invalidation, of course, is the all-time low, and the bearish scenario is counting this impulse up as a wave C of a flat structure. A, B, and then a wave C towards the upside. For me at the moment, lower probabilities, right? It's an alternative for me, but this is also where risk management comes in, and we have to keep an eye on what price, of course, is doing locally. But if this would be a flat ABC, then you would look for price to continue down impulsively. So preferably you would look for another wave 1, 2, 1, 2, and then get a big wave 3 to the downside to absolutely 0, basically, right? So yeah, at the moment, an alternative, this is what I keep an eye on for now. And the invalidation is very easy. It is the all-time low. So, it makes trading this asset or, investing in it incredibly easy. You easily know your invalidation. Now, if we then look at some confluences on the chart, then price touched my support box over here. And this support box contains a monthly order block. Actually a weekly one, not a monthly one. So it's the order block on a weekly chart, this red candle. And the monthly thing I wanted to talk about is a monthly point of control. So from a month here in the past, the month of November 2023, the point of control was touched here with this particular low. Now to the downside, of course, at like around 3, we have some more support locally at 4619 to 4610. To the upside, first area of resistance, weekly naked point of control at 5.329, And then you can see we have some gaps towards the upside, right? If we can flip this level and move up, break the high here at 6.12, next up 7.232, and then we get to some volume levels again. So the red levels are volume levels. The colored levels like yellow, purple, those are time frame horizontals. Now, I am personally mostly a fan of volume, so the red levels for me are always the primary ones that I keep an eye on, which means that to the upside, those are my most interesting areas of resistance. And you can see that also here, we have a monthly naked point of control and a weekly pretty much at the same area, being around a 14.5, 14.6. Now then I like to talk about Elliott wave simplified. So without counting this structure here in detail or this move towards the downside, it starts to be quite interesting to look for a bit of a reversal to the upside anyway. And what I am going to explain now on this chart is related to what I talk about in the Elliott Waves Beginner's Guide on my channel, the first video here, the simplest way to use and trade Elliott Waves. It literally changes your approach. It's super easy. You don't even need to count, right? It's more about structure, but you still use Elliott wave knowledge, even though you might not know really a lot about Elliott waves. So if we look at this move to the downside, right, of course, we have our first structure, second structure, but in an impulse to the downside, what we like to see is a bit of a grind in the beginning, then a sharp move down, and then we like to end an impulse with a bit of a grind again, preferably on a declining amount of volume. Now you can see that here we had our messy start, then we get acceleration to the downside on peak volume as well, right? And then we start to create lower lows on price on a lower amount of volume. And this is like a bit of a signal that a move to the downside starts to get exhausted, right? A reversal might be coming soon, and then preferably a reversal touches at least the 0.382, sitting at 6.915. That is generally a minimum target for a reversal, and this fib is taken from the high to the low. So just by observing the structure here, it also becomes quite interesting to look for price to move towards the upside. We have a bit of a grind, quick move down, and then a bit of a grind. And you can see that I suppose, I don't know exactly how to explain it. The curvature, I suppose, the curvature of the chart, right, is steep move down here, and then you start to curve, right, and volume is declining. So it becomes interesting to look for a bit of a move towards the upside. Now then we have the potential setups that I like to talk about. Now you can also see the more risky one is the one on the left, which is where price is now over here. Stop loss at the invalidation if you are sensible, of course, or if you want to take even more risk, of course, a stop loss can be put at this particular low, right? But yeah, I mean, I just have the invalidation of an Elliott wave scenario as the stop loss here. And then look for price to eventually take out the all-time high. Because if this is higher probabilities corrective, you look for price to take out the high, which then would be a minimum target. Now, the reason that this is more risk is because your bearish scenario is this being a wave C. This is then a 1-2, maybe another 1-2. So you do retrace back to the upside into the 382 and maybe some other fibs. But this then is another 2, and you look for price to move down and take out the low, and down you go basically, right? However, if price can touch the 886, and now we get to the less risky scenario. If price can touch the 886, right? So it requires a lot more patience. Price moving up, touches the 886 here, taken from this high to the low. It significantly reduces the probabilities that this move down is a multi-1-2 and a 1-2-1-2-3. And we cannot count this structure at the moment as an impulse in a 1-2-3-4-5. We also have overlap over here between then a low of 1 and maybe a potential 4, so that doesn't work. And it is too early to count diagonals at the moment, right? For a diagonal, you still need another move up and another move down as a bare minimum. So a diagonal doesn't have the highest probabilities. So therefore, if price can move up